This is Short Hammer. It is the 15th of January 2020, and we are taking a look at Amazon on the daily chart. Now, I really like Amazon, and in my last video, I mentioned that we were super bullish, and I'm still bullish on Amazon. As long as we hold the 1830s, I think there's definitely a chance that not only do we push up through the 1950s, but potentially up into the 2000s. With earnings on the horizon, I think anything is possible with Amazon. Now, if we're looking at the daily chart, I drew this trend line here, which it tested today on the slight pullback in the market. The focus, I think, for a lot of people was on financials, but what made the market dip was the information that was coming out around the trade deal that was not exactly what people expected to hear. And it was basically saying things about the tariffs. And not gonna get into the details. You can search that if you would like to check that out on Wall Street Journal or on another one of those news sites. They have the details of that. But it did cause the market to pull back, and that's what's important. Now, what has been happening on these pullbacks is people have been buying the heck out of the dip. So here, the trend line did hold, and we did go back up. Let's take a peek at this on the 4-hour chart. So on the 4-hour chart, this looks a little bit different where we see these candles and maybe this is going to hold here and we will see a buyback up. So if we break above the 1875 area, we definitely have room into the 1885s. And maybe we hold here and then we go on a nice little squeeze and run to the upside. Remember that we do have bank earnings that did come out yesterday, and there may be more earnings coming out today. We are entering an earnings season. So we should expect if you're trading options, premium prices are going to go up for certain tickers, and also watch for a run into earnings for a lot of these tickers also, as long as the geopolitical news and the trade news doesn't go insane. We should be cool as far as a move up here on Amazon. So if we look at the intraday, and I know I'm jumping around a bit trying to get through this quickly. Let me move one back to the daily chart. So to be clear, my plan on Amazon is that to buy the dips, and I do believe that this is going to squeeze up into the 1930s through the 1950s. And then we have the potential for a push into the 2000s and maybe potentially all-time highs. As you look around the market, quite a few tickers are hitting all-time highs, and Amazon is not. So we'll see if Amazon does catch up. We had a nice move this day to just try to catch up to the movement in the market, and we'll see if Amazon has another one of these where we just rip and run to the upside. So if we go to the intraday, we had a bunch of plays on Amazon that were there for the intraday. So at the open, we sold, and we have this line here at 1885, one of our supply demand areas, and we were also below the weekly pivot. This was a short. I didn't take this trade. Usually when the market opens for the first 15 to 30 minutes, I'm just looking around and seeing what's setting up and what patterns I like, and I try to figure out the trend of the market before I enter a trade. The only time that I will not do that is if I already have a planned level that I really, really like, and I might take a shot there. So on this pullback, what we'll see is we are now testing the pop green intraday pivots. And once we push through this one here and rebounded, we were sort of in a bit of a channel between these pivots. And what I did was, which was absolutely fascinating, is I was listening to someone. I let someone talk me into getting short here. You never get short here. And this thing started to squeeze against me. And so my plan was I am not going to exit the trade, which I should have done on the regain of the pivot. I waited for the squeeze to the upside. And right when we entered the 1870s, I knew there was a bit of supply. So I averaged, and on the pullback down here, I was able to exit this trade. But this may not work every time. Sometimes this thing could keep going. So a rule of thumb, especially if you're using pivots, is that if you realize that it's respecting a specific level, as far as here's the candle structure here, look at the bottom of these candles, and we're here again. If you realize that those levels are being respected on the push through here, this is not a chance to go short. This is actually a chance for the dip buyers to step in. And that's exactly what they did. And so we see this bottom kind of holding here in this relative area on Amazon. So tomorrow we'll see if we can get through the 200 SMA if we see a squeeze through the 1885s. But this is a play that people do make, is the back test of the pivot, and they would fade it and exit here and then see what happens. And then when we pull back into here again, they could look to get in and fade this again. And you play your levels, pivot to pivot, and fade this again and see if you get that to work. So this was definitely a great play today. And even with my lack of focus, bad entry, still managed to work out because we were slightly range bound on this. If we were in a trending day, I would have been on the shortest end of the stick. It'd been all bad because that would mean that I would have been short here. We'd have hit this level up in here. I would have averaged, and this thing would have taken off to the next level, taking all my money. So what you don't want to do is play a level and then wait for the next level. The best thing usually to do is to exit when you see that the demand level is holding and you're short. Exit. You will always have an opportunity to reposition. Never be married to an entry or married to a trade. Be quick to change and see if, hey man, rather than if I'm short here and I see the buyer step in, get out, get out, and wait to see if we break under, retest, and then on that failure, then you can short again with your stop still being a break and hold above. So here, if you were short into this, you had an opportunity here when it pushed through and it back tested and held. You can exit this trade. Okay, maybe run to the upside and you wait. It broke back under. Here's your back test. Get short. We're going down. And you can choose to exit this because from here all the way down through here is about 3 or 4 points. You can choose to exit this, or you can choose to hold and say, hey, I'll wait for this to break back and close above this pivot before I'll exit my short position. We back tested again, and then we had some little bit of sell side activity, and you'd be able to exit down here. So from here to here is about 6 to 8 points. So not too bad. So that is one of the ways that you can utilize the power of pivots and Elisa's pivot strategy to trade tickers like Amazon and many other tickers in the market. Now, this is on the 5-minute chart. And I did do that today, and it worked out pretty well for me. Even though I had a horrible entry, it still managed to work out because we were in a range-bound day. If you like this video and would like to receive more videos like this, please tap the like button. And also don't hesitate to subscribe to our channel, The Power of Pivots, to receive more content like this, and also content from Elisa, the creator of Power of Pivots.